Hi, this is Mike Swanson. I'm here with Dave Skarica, and we're visiting a friend of ours in Napa Valley, and you get this amazing view. Thought we'd show it to you before we talked about the serious stuff going on. And today,
I have to say, I go to a lot of places in the investment industry, and I know I do mining tours, but this is easily, it's a guy named Gordon Holmes who runs the AU report. This is easily my favorite office to go to in the world. Actually, we got a flight this evening, but we kind of, half of me doesn't even want to leave after seeing this view and everything.
no, it's
This is the Napa Valley, like at its finest.
But today, I know the Fed's meeting at 2:15 Eastern Time. It's like one of the most widely anticipated Fed meetings all year. They're supposed to, announce quantitative easing of $200 to $500 billion. And I thought, maybe we would talk a little bit about how to profit from all this money printing that's going on. And your book really covers that. But, I'd like to see if you can share some ideas in your book about that.
Yeah, if my book, the thesis we've talked about in the first two interviews, we talked about the debt bubble, we talked about these economic cycles, and one of the cycles theories is that when you have a secular bear market, and secular basically means a long-term period, bear market in stocks, usually the money has to flow somewhere. And if you look at the last secular bear market in stocks, the teens, the 40s, the 1970s, all those periods in stocks did nothing. Commodities all went way higher. The CRB index went up multiples of 100% in both the 40s and 70s, and has done very well in the last 10 years. So I think that's actually going to continue. And if you look at, we were just talking about this morning how Australia raised their interest rates, and India did a little while ago, and a lot of Europe, like the British and the Germans, are cutting back on spending and seeing kind of austerity programs. The U.S. isn't. So again, the fundamentals fit within that long-term secular cycle that the U.S. actually is going to print more money and is not going to raise rates, and it doesn't look like the deficits are really coming down anytime soon. And that means the lower dollar, which is going to mean higher commodity prices and more inflation. So I still think a great way to play, the great supercycle, part of that great supercycle is commodities. And so we look at oil and gas. I really like to find depressed commodities for whatever reason are lagging, and then you can take advantage of that depressed state. Like if you look at the agricultural commodities earlier in the year, I was recommending the RJA in our newsletter, and that took off. And some of the agricultural companies have done really well. Right now, I kind of really like natural gas because it's been a commodity that's really, really been lagging. Natural gas might not move 3 months, 6 months, 12 months, but at some point it's going to play catch up to the rest of the energy and commodity complex. So I think that's the way I look at it, because all these things see sector rotation. Like one commodity I was bullish on and did well on was sugar, which has had a big spike recently. So I think you look for commodities that are beaten up and that the rotation of this money has to go into them. And you also want to be long-term bullish, gold and silver. And my book kind of gives you trading techniques to profit from this long-term commodity bull market. And again, the final fundamental theme, of course, is China and India. We have 2.5 billion people in the world, and these countries are now growing at 8, 10, 12% a year. And that's going to cause a lot of demand for commodities. And it's funny when people talk about the U.S. economy is weak. Oil should go down. But you've got 2/3 of the world, 4 billion of the 6 billion people in the world, where the economy is strong. And that's where really the demand from oil, gas, and a lot of these commodities are coming from.
Well, the thing about right now, your book and what you just said, you're talking about these long-term commodity cycles, and I know basically 2001, 2002, we started to see this cycle and bull market in commodities. The bull market in commodities start. You saw gold start a bull market, and then in 2003, oil started a bull market. And then, of course, in 2008, we saw a big correction. And gold recovered quickly and, was trading at new highs and doing very well. And when I look at the charts, right now, it looks to me that the other commodities, such as agriculture and, assortment of other stuff, too, when you look through the list of them, some of the meats and so forth, they're coming out a long-term basis and look like they're going to follow gold into new bull markets. So I think it's real timely to be buying them, and that's actually what I plan on doing. I think that after this Fed meeting, we'll probably get a pause or a pullback at some point, And these are places I'm actually looking personally to start putting some money in.
No, I agree with that. I think, again, you look at these commodities that are kind of lagged, and gold, I think, has gone up because of the monetary situation. And obviously a weak economy kind of helps gold in a way because it's a flight to safety as well. So, yeah, I definitely agree, though, you're going to want to look at expanding into some of these other commodities and that sort of thing. And, things like people usually don't look at, like some of these, like you're talking about, like meat, agriculture commodities and things of that nature, and the grains, or these things are things I think you're really, really going to want to look at going forward here. And I think, too, oil's still going to have to base for a little bit on the energy side, because after the huge spike you saw in 07, 08, that usually just doesn't end with the V bottom. It's probably going to take a little bit of time to pan out before it really moves higher. But you talked about the 08 crash. One theory I come up with in the book here is 08 to commodities was like 87 was to stocks. That in 1987, the stock bull market had just begun in the early 80s, and then had a short, sharp, strong pullback, and then and then they all, then based for a while, and then they all broke out to new highs in the 90s. And I think that's essentially what most commodities are going to do over the next 5 to 10 years.
We'll follow up with another video and talk about emerging markets.
We're going to do that in Las Vegas.
Yeah, and talk about some countries, that we think are
poised
great
to do well.
position. Yep, so we'll talk to y'all later.